Hello, and welcome to the Joss Brown Podcast. With over 40 years of combined financial planning experience serving high net worth clients, we will discuss our favorite topics, concepts, and stories.
Hey, welcome. Today we're going to be talking about real estate and real estate investment trusts and kind of the pros and cons of each of those. I'm Dan Joss.
And I'm Katherine Brown.
Welcome. So you invest in real estate.
Yeah, I've invested in real estate my whole life, pretty much.
Yeah.
It's just kind of part of my family culture, really. I didn't know a lot about stocks, but I knew a lot about real estate.
Well, I invested in real estate, I'll say it, kind of.
Mm-hmm.
I bought my first house after I got married. And then when we moved from that house, we kept it as a rental. And then it just kind of happened from there. How would you characterize your investment in real estate?
Well, I started the way you did. I bought my first house. But the first house that I bought, I thought of it as an investment property, not like a home I would live in.
Okay.
So I actually bought it sight unseen. I didn't see the inside. Just drove by it and saw the neighborhood.
That's how everybody
nice.
does it the last couple of years.
Bought the house. And then we moved in knowing we would have to fix it up, and we did that. And then we took advantage of the 2 out of 5 year rule. Mm-hmm. So we lived in it for 2 out of the previous 5 years, and then sold it without any capital gains. And we had actually planned on doing that over and over and over again until we decided to move to Virginia. This doesn't work as well here as it does in Silicon Valley.
So that was really what we did, was two different approaches to real estate. I took a house that was usable and used it and then rented it. I rented that for over 25 years. And and so I guess I was looking at the income stream, and then you were adding value.
Yes.
Fixed it up and then sold it.
Right.
Okay. So that's two different ways of doing the same, residential real estate property.
Right.
So you have to ask, how am I going to add value, or how am I going to get value out of this investment?
Right.
Or really, what do I want to do with this investment? Because if you get a fixer-upper and you don't have the ability to fix it up, that'll cost a lot more.
Yes.
And if you get an investment hoping to rent it over the long run, there's costs with managing it for 25 years, and taxes for 25 years, and maintenance and all the other things.
One, yeah.
So that's one way. What would you say is a pro versus a con of investing in residential real estate?
I think the pro, especially for younger people, is that the equity isn't readily available, and so it's not as tempting to spend it as you would if it was in a brokerage account for most people. So you're kind of really vested. You've got this asset that's not very liquid. You're putting money into it. You're making payments on it if you have a mortgage, and so it's more of a forced savings.
And forced long term.
Forced long term.
Because if the market goes down, you can't just sell it.
Right.
It takes at least a couple of months.
While. Yes.
And maybe more than a couple
more.
of months.
Yes.
Okay. So what would the con be?
So the con would be the opposite, lack of liquidity, right? And then the unknown of the economy, the rental cycle. We've both had rentals. Sometimes you can rent easily, and other times your rents go down. I remember during the .com bubble, the rents went down 50%.
You probably wanted to keep the people in it.
Yes.
So you lowered the rent for them.
Right. So the rents went down. During the rent freezing, the landlord freezing time, where we couldn't kick anyone out, we had rentals where people just didn't pay because they didn't have to. The government allowed them to stay in houses without paying their rent. So that's a con. And then the maintenance. If something breaks that's really expensive, you really have to have that reserve to pay for the expense. So.
And the flip side of that specific con is for the tenant, that's a pro.
Yes,
they don't have to worry about maintenance. They just make their monthly rent.
Right.
And let the additional costs be covered by the landlord taking the risk. Yeah. Okay. So we rarely recommend residential real estate investments for our clients.
Yeah, it has to be something that somebody is doing because they have an expertise in it, or maybe a background in it, like a realtor, right?
Mm-hmm.
Or somebody who comes from a long history of construction or working on things.
Someone
or
has
handy,
capability to do that stuff because the cost of that is sometimes I'm not going to say prohibitively expensive. It makes it so the investment isn't worth it.
Right.
If you can't do that stuff on your own.
Yes.
Yeah.
Yes.
But as opposed to rental real estate, where we recommend that for some clients, we recommend real estate investments in the form of REITs for all of our clients.
Yes, it's a good diversification strategy.
Okay. So what would what is a REIT? Or specifically the way we do it, either a mutual fund or an ETF of REITs.
Right. So it's basically a share of a corporation that's actually investing in real estate for you, right? And usually that is commercial real estate. So hospitals, schools, cell phone tower land.
Strip malls, storage facilities, some retirement communities. Yeah.
Yes.
Yep. And that has changed over the last 25 years as there's different forms of real estate. And the pro of investing in a REIT or a fund of REITs?
Well, one pro is you don't have to worry about maintenance cost, leverage, or any of those other things. You have a corporation that's doing all of that for you.
Yeah,
So.
and the shares show up on your investment statement.
Yes.
And they go up or down, and the income is regular.
Yes, and it's liquid.
So much more easy to do.
Right.
And the con, what would be a con of investing in REITs?
Well, the optics of it, right? You get to see the ups and downs on paper, and so they can be a little more nerve-wracking than having the actual physical real estate.
Yeah, you alluded to that earlier. Was if I can see the daily value of real estate change, I'm more likely to be attached to it, and my emotions are going to be more involved with the decision.
Right.
So a down market like we saw recently in REITs could prompt me to want to sell it.
Yes.
When if I had a house, it wouldn't be possible.
Right.
Yeah. So that short-term thinking may play in it a bit. Although the way we recommend it, it's always a long-term investment.
Yes, and when it goes down, we buy more, right?
That's right. Rebalance. Yeah. And what was interesting in and I guess yours too, the first decade of me investing in REITs was 2000 to 2010, when the large cap U.S. stock market ended where it began. Rates were positive most of those 10 years. That's and outperformed the S&P 500.
Right.
And so there is long-term good performance.
Yes.
And we benefit from rebalancing in those short-term periods of down markets.
Right.
Yeah. And then the newest venture that we're doing is private equity.
Yeah.
In the form of multi-purpose, multifamily
multi-unit,
units,
multifamily.
or neighborhoods. And that's a whole different conversation for another day. But it's just to show there's many types of ways of investing in real estate.
Absolutely.
Yeah. So REITs, residential real estate rentals, and the pros and cons of each.
Yeah. Great. Thank you.
You're welcome. Thanks.
Thank you for tuning in to today's episode of the Joss Brown Podcast. If you'd like to see more episodes, visit our website at jossbrown.com.